Hello. Uh, if I'm audible, please leave a message. Hello. Hello. Am I audible? Hello. Yeah. Now it's updating. It's updating. Thank you, guys. हिंदी लेना है कि shall we do it in English? Which language will you guys prefer? It's Hindi or English? Only English. Okay, fine. We'll do it in English then. This chat is not updating here, so I have to pop it out and some problem with YouTube. This new feature. Okay. Okay, so let's first go on to the option chain. Uh, okay. Uh, Now annotations are not working on this. No. I'll not like the video. The stream will not be shared publicly, but yeah, you will get the links to watch it for 24 hours. I'll keep it on the YouTube. Don't worry, you will get the recordings. Don't worry. Okay. So let me take the screenshots. Okay. Now, shall we start now? So here is your option chain of this expiry. Okay. So see again, uh, the way I use it, it's bit different. So increase the volume. Okay, just a second. Not sure what's the now is fine. I guess audio is now maximum, so it should not be a problem with the audio now. uh, so okay, so as usual, this is what we are doing currently is your EOD analysis. Always we start with a day prior, and then we move on to the intraday stuff. So as usual, I only look at the change in open interest. So we can see some writing is here happening, heavy writing on 600 call or 600 revel, whereas comparatively we can see some writing happening on the puts as well. Okay, then the next strike price we can see some writing happening on 700, but no writing on the put side, right? So 700 will not be my concern for tomorrow. As well as on the put side, we have some writing on 450 as well as 400, and also in the money we also have this. So this looks good to me for tomorrow. This looks good to me for tomorrow, right? So now I'll be focusing on 400 as support and 600 as resistance going for tomorrow. Fine. And now I'm looking at the IVs. These are your IV column. These are your IV column. As we know, these are your puts and these are your calls. What normally I like to see is my put IV should be greater at the money, should have a greater value at the money than this thing calls. Okay, I want my put ka IV greater than call ka IV at the money, on at the money calls or puts or option strikes, whatever you can say, right? Here we can see that the puts have less IV than this. So volatility may adjustment, no, the issue is not from my side. Signal issue. Is anyone else having the signal issue? अंकिता आवाज. Volatility adjustment will be possible in today's session. Okay, thank you. So keep this in mind that volatility adjustment is also possible in tomorrow's session. We will come subsequently where we will observe the volatility adjustment and all stuff. So this thing, normally what I like to see is the puts IV should be greater than my call IVs, so that it's like I can say that yeah, volatility is working fine and the directions or the writings which people are doing are as per the basic rule, the non-said rules. That way I observe normally. So that's fine. So now here let me take a note of it. Let's open a notepad. Okay, I am taking 11400 as support, 11600, right? Yeah, 11600 as resistance. Let me increase the font for you guys. Okay, as resistance. Also I am expecting a volatility adjustment is on the cards. Now this is done, like this part is done. Now what I like to see is how much writing is happening on this. So what I check here is like first I'll select the option strike prices where I want to check my which strike price I am considering. So basically I like to consider where some volume, some activity is happening along with the OI change. Okay, so let's say this change in OI is done with a considerable volume compared to this. This change in OI is done with volumes. This is done. This is also done. Yeah, these two are also quite active. these two also active, and on this side we have activity till here. That's active, that's active, that's active, that's active, like that I consider. So here it is quite safe to say that I can say from, let's take 300 to 700 strikes were active on Friday's session. So now here our job is to calculate this ratio, that what you say, total OI upon change in OI at this range, in this range, here as well and here as well. This will give you an idea where the maximum number of writing is taking place. So I'll share that analysis with you. To save up some time, I'll show you a ready-made option which I have already shared with you guys. Yeah, check out here. Like, I have taken these many strike price, like this box. This was going into expiry. So I have taken this box and checked where what OI change is happening. So here 18% writing was happened on that day, whereas the writing was same on on here as well. So when we get same amount of percentage writing, it means that market may stay sideways. Okay, and if it moves out of the range, a high volatile move may come. So this percentage, like how much percentage writing is happening in this strike as well as this strike, based on the OI buildup, we will get an idea. Like day before that, analyzed for 24th, we had around 30% writing on the call side, whereas we had 73% on the put side, right? So based on that, if we check the charts, if we check the charts for now, what's problem? Okay, now if we check the chart for 24th, you can see we have a small range day, right? But here bullishness was expected and my market did gapped up 0.22%, right? So that's how basically we do. So any doubts in this, anything which is not understood till now? Yeah, this formula, sum of, yeah, total sum, like let's do it, chalo, let's do it right now. What I'm doing is what I'm doing is I'm adding up, where is, okay, I'm adding up this OI change till this point. So yeah, I'm repeating, and this change total OI from this same strike price. Yeah, negative is, if it's negative, you do it negative, it will subtract from your calculation. If you explain on identifying total writing, okay, so let's do that. Let's go on to our option chain again. Let's copy those strikes which wanted to do from 300, right? So from 300, let's copy this till 700, and let's go on to Excel to do it a quick way, shortcut you can say. And let me paste it here. Fine. So this row is shifted. Okay, for convenience I'll say this is your net OI, this is your change in OI, that's your strike, that's your net OI, sorry, that's your change in OI, and that's your net OI. Okay, what I'll do, I simply want the total sum of this. So sum of this all strikes together, this is my total change in OI for that day on the call side. Also I'll do sum of total this thing OI for that day. Okay, based on the activities, that's my volume, right? Based on the activity of volume and change in OI, I have considered this range only. Okay, I want to identify whether my call writers were having a dominant power, or my put writers were having the dominance on the option chain itself. For to identify that, I am doing this. So for call side, we have to do change in OI upon total OI. That will give you the net writing happened on that particular day. So that's your around 43%, right? And here, let me do that quickly. That's sum. Okay, and the net percentage will be like this upon this. Okay, so let me hide this much parts, as we don't want it anyway. Okay, and let me zoom it. Now I think it should be visible to you guys. Okay, so as we can see, total 43%, 44% call writing is happening. No, Bobby, actually we are considering close to the price action. We are taking this data to trade for tomorrow as an intraday. So normally premiums are higher near the ATMs, right? So for that reason, I'm only taking those strike price which have a subsequent amount of volume with subsequent amount of change in OI. And I don't want to go far away from my ATM. Otherwise, I'll miss the point actually. There is no fixed rule to it. If you want, you can take till the highest level possible. But at the very far levels, people do write more options to eat the premiums, right? Slowly, steadily, they'll eat up the premiums. So due to that reason, I don't like to go far away. Okay, I connection is fine for me. Are we live? Are we live? I don't know what's the problem with this YouTube. Stream is working fine. Okay. Okay. So yes, okay, thank you. So we were discussing this, that there are 43%, 44% of writing on the call sides, whereas 32% writing on the put side. Right? So as we can see, Friday call writers were more aggressive, you can say, or more dominating compared to put writers, right? So this is one view we got. So let's we will note it down that 43% OI was added in calls, approx, and 31.5% OI was added in puts. Okay, so you can say clearly that call writers were dominating in the Friday session. So now we know if we get a gap up tomorrow, right, these call writers have to adjust their positions, right? So we will keep an eye on that, what happens in the first 15 minutes when we open tomorrow. If we open gap down, then that's the idea we already have. Okay, if uh, so I hope this clears now. How do we got this second point? Is it understood till now what we have taken? Okay, so that's your, like, this much EOD analysis I do. Uh, this much analysis I do before the market opens. It's not puts, these are calls, right? More writing is happening on calls. No, Bharat. Remember, this analysis we do on EOD. This analysis we do EOD to identify what may happen within the first 15 to 30 minutes. Okay, we have an idea that call writers were aggressive on the last trading session. Now, as the market opens overnight, few things may change, right? So, as the market opens, these call writers may run away, or they may start adding the positions aggressively. Both scenarios are possible. So here we are just taking a view that what we are expecting when the market opens within the first 15 minutes. Got it? Now, if we analyze our Nifty chart, clearly we are trading in this range, like from 450 to 700, right? And that's the same range we got where the writing is happening, like 600, 700 and 400, right? So if either of this level breaks on intraday, okay, normally retail public will go for long. Suppose if this resistance zone, like around 640 to 670 zone, if price comes to that level, retailers will start, buying as a breakout trade. They'll look for the breakout entries. But at the same time, if we look at these strikes, 600 and 700 options, if the writing is happening, we simply look for the sell trade from the highs itself. Means this way we can work out with. That's how actually I work out with. Okay, now based on this data, I have a bearish opening view for tomorrow. I'm expecting it. It may or may not happen, right? So if that's a bearish opening I'm considering, I'm keeping a bearish view. What I'll do, Let me take a screenshot again. Ah, okay. Say, yeah, during live market we see data every 15 to 30 minutes, right? So now, say this: if my view is bearish and I want to create a strangle, then I'll select those strike price where my calls have higher premiums than my put, right? And my view if I am carrying a bullish view, then I'll create a strangle where my puts have high premium than my calls premium. Okay, and normally I like to select those strikes which have 2/3 ka ratio. Okay, so let's discuss for tomorrow. Tomorrow I am carrying a bearish view at the open. If market satisfies my view within the first 30 minutes to 1 hour, what I'll do, I'll simply select a call. Let's say for example, here I am watching these two strikes. So let's select for example this strike price, right? So the price of this call is 35. So against that I want a put side which has around 2/3 of the premium, that is around 20 to 22 rupees, 2/3 value, right? Which I'll get somewhere here, these two strike, and this strike has the highest open interest, right? So if this is the option chain in the live market around let's say 10, 10, 15, then I would simply short this 300 ka call as well as this 700 ka call. In the normal scenarios, let me correct myself, in the normal scenario as in my IV, puts IV will be greater than my calls IV. Here we have an inverse case. The volatility on the call sides is bit higher than the put side, right? Normally put side implied volatility stays higher. So a volatility adjustment will happen somewhere during the first half of the market tomorrow, where the option premiums may fluctuate for a bit, and then it will adjust itself accordingly. Okay, if you like to read more on this, you can look for a concept of volatility skew. There is a concept called volatility skew if you want to look more into this. Okay, so if I am carrying a bearish view, I'll select the calls. Oh yeah, that's what. No, that's why the volatility shift needs to adjust, Siddhanji, right? So okay, let's continue. If I'm carrying a bearish view, I'll select those strike prices for strangle which have calls as the higher premium, and my puts will have the lower premium compared to the calls by at least 2/3 of the call value. Okay, so this is like during the first hour or during like before the market opens and during the first hour, what I'm observing, I'm not taking a trade yet. I'll do a few more things before I take the trades. Okay, so I hope this much is understood to you. If you have any questions, you can ask in the chat. Let's go on ahead now. Next thing, for an option trader, India VIX is very important. India VIX is a tool which is very helpful for both option writers as well as option sellers, right? So let's check the India VIX chart. Here I have a chart. You can see these lines are drawn already. Let me remove that swing points. These lines, these few white lines are drawn here, right? So what I want to sell options when my VIX is higher, and I want to buy options when my VIX is lower. You might have observed that on Friday options value, like options price, were not shifting much because of this VIX factor. VIX was almost trading in a very tight range, right? So we want VIX to fluctuate. When the VIX is rising, right, the suppose if my market is falling and VIX is rising, in that situation my put options ka premium will grow faster, whereas my call options ka premium will will decay lesser, will erode slowly compared to the calls, compared to the puts, because my VIX is rising. So during the rising VIX we want to buy options, or at least we don't want to sell options, and during the falling wicks we want to sell options, because there is a Greek called vega which depends on volatility. As volatility decreases it will eat up the premium, so that eat up we want, that premium we want to eat as a seller. Okay, and if you see this chart very closely, VIX normally stays or try to stays in a range, right? Like here currently on Friday and on Thursday and Friday it was maintaining this range, this point. So as soon as my VIX comes near this level, I look for buy option if I have a view at that point. And if I get a view VIX here, I love to sell the options. Okay, there are situations where, let's say in this example, my VIX was trading in a range and the range shifting is happens. Like here the VIX was trading in this range. Let me draw this. This was the range in VIX was following, and suddenly a spike happened, right? During the situation, if your premium is getting out of control, you have to adjust your positions. Okay, so normally in that situation, particularly in that situation, you may add a iron condor kind of setup to your system, like both strangles are there. You may convert it to debit or credit spread based on the conditions. You may add an iron condor like of structure basically, or you may look for an butterfly sort of thing, modified butterfly or normal butterfly sort of things. Okay, but normally in those scenario, if premium are acting very weirdly, I'll normally book my losses at that time. I don't want to adjust the positions. It's my personal view. Okay, so this VIX plays a very important role for intraday traders, and normally VIX stays in a range. If it breaks a range, and suppose if this is breaking the range and I am on the buy side, right, it will give me tremendous amount of money. And this was the 20th September, the finance minister announcement day. So this kind of huge move in VIX is expected, right? Now there is one more funda to the VIX. Like people normally have confusion that whether it's a short covering rally or like a new, it's a pure rally or a short covering rally, right? Rally means our price is moving higher. So normally what should happen is when the price rises, VIX should fall, right? When the price falls, VIX should rise, because VIX is also termed, also called as fear index. So when price is rising, investors have less fear. When the prices are falling, investors have more fear. That way VIX should work. Okay, but sometimes when price is also rallying as well as VIX is also rallying, that is price is going higher as well as VIX is going higher, that time you can say that you can have your doubts that this rally could be due to short covering, right? And when the prices are falling and VIX are also falling, you can say that it's the correction, the fall which we are seeing, the corrections which we are seeing is maybe due to the profit booking. Okay, but it should not be looked as a bar by bar. It should be like, overall view, overall context of the market. Okay, initially when the news came, we can see market was trading in a side range, then a fall happened when the price started moving up. So some people have thought that it will act as a bull trap and price will reverse. But when they got feared that when they started covering their short positions, my VIX also started rising. So you can observe this phenomenon within 1 week. I'm sure you will understand this. Like VIX is that helpful. But obviously in the live market it doesn't help that much except for our entries in options. But for EOD studies it's really a helpful tool, at least for me. So normally I took this as a thing. So currently I haven't shifted this range, but now I'll shift this range from this level to, let's say, this level, and tomorrow I'll be playing out this range, that if I find VIX around 16.8, I love to sell the option, right? If the VIX fall below 15, still love to sell the options. If I see a VIX bouncing from this level, I'll look for some buy opportunities in the option, or at least I'll close my strangle which I sold early in the morning, right? And also based on this, I also see the Nifty chart. Basically, I prefer to use both Nifty as well as Bank Nifty. Sorry, Nifty as well as Nifty futures. So it depends. I mean, it's on your choice, right? So whenever Nifty approaches certain resistance and my VIX is also near my range, I take a risk and do my strangle with a bearish view. And when I see a Nifty near the spot, near the support, and if my VIX is also near its lower range, that time I'll not take any positions, right? That time I may look for the futures, like entry in the futures. If it is taking a rejection, I may go long near the support. If the rejection is not there, selling pressure is not there, uh, if rejection is not there and selling pressure is too much, I may look for, to as a sell trade in the index futures. Okay, so technically my style is that I love to sell the options when the Nifty futures or Nifty spot price is trading near the resistance, as well as VIX is near its upper trading range. So then only I like to sell the options. Normally buying options I do very rarely. So it's like my style. That's how I trade basically. And which strikes to select and what. For that, let me give you this thing. What I do is observe this option chain, right? This option chain is the screenshots I have taken to show you guys during the webinar. So this is my EOD chart which I have taken somewhere in the morning before the market opens. Here you can see I have taken the time and the spot price as well, right? So that's the first before the channel. Then after around 11:29:25, I have taken another screenshot. Okay, then after 9:38 I have taken another screenshot. Okay, so this way every 15 minutes you have to compare two charts. Okay, so let's compare this, or let's say 1938 and then 10:15. So let's compare these two, one at 10:15 and another at 9:38. Okay, just a second. Yeah, so at 9:38 we can see something is happening here. We have around 12:55. That's your this is your new option chain. So here we have these many contracts. Okay, like we have two websites nowadays on NSE India, the old one which gives you quantities and the new one which gives you number of contracts. Okay, so this was done on the new one. So in the morning we have already moved from 7:29 to 11:20, 16:20, sorry, not 7, 11:629 here at 9:25, and we are at the same rate around 9:38 as well. So it's a sideways move basically. And then here we can see some writing is happening around 700 level. Also some writing is happening around 600 level. Here 600 support is also emerging, right? So we are looking at 700 call, 600 call and 600 put only in the live market. Now at 10:25 I can see this was your 2604 700 call, and here we have 6960. So how much is the change approximately? I can say around 4300 ka change. 4300 contracts were added in the call of 700. Then if we check this 600 ka call, the OI was 1562, whereas here 600 the OI is 25, approximately 25. So 1000, approximately 1000 contracts were added in 600 call. 4300 contracts were added in 700 calls. What about put? We had at 9:38 we had around 5885 contracts change, and then it has 8257. So 5800 to 8200, it's almost around how much, 2400 something. So here at the money we are having large number of contract addition on 600 quotes. So people are thinking that 600 will hold, right? And here we have a huge number of contract selling on the 700 quotes. Okay, so people are thinking that 700 will hold as resistance and 600 should hold as support. So let's go on the chart and check what happened. The date that created was around 24. So let's check 24 ka time. As you can see, the price was trading the whole day in this range, which is this much, 650 and 550. Right, so that's how we can get an idea. The call writing is also happening, the puts writing are also happening, but how much is the question? So you have to keep track of the two, like option chains, like what happens in every 15 minutes. Like here the contracts were around at 10:15 we had 6960 contracts, and here on the put side we have 8200 contracts. This is becomes 300 contracts were increased, whereas here we also have approx 300 contracts were increased, right? And as you can see in the price, from 624 my price has fallen to 1598, right? So this way, I mean, you just cannot see this thing like uh, whether my writing is happening on the calls or whether the writing is happening on the puts. That will not help you. You have to keep track of what amount my options are changing. Like earlier how much it had, now how much additions happened in put, as well as how much addition happened in call. So I hope this clears like how in intraday you can identify which side market wants to go. I hope it's making some sense to you guys. So if you have any doubt, let me know. Hello, am I audible? Hello? Yes, yes. So any doubts in this or anything you want to ask? And this much I do normally in the market. Um, yeah, Madhuji, if the market is behaving the same way, uh, you can hold your position, but as soon as you see that the other party is coming, like call writers are winding up their positions or put writers are getting aggressive, in that situation you may want to close your puts, right? That way, this thing, if you want to do options positionally, I'll simply suggest either do on the monthly option chain. Don't carry any position overnight in the weekly option chain, because the theta decay will be so much that even if we gap up gap down, it will slow down your premium growth. So that's why in weekly option chain, carrying overnight risky but very profitable. Sometimes it's very profitable but it's very risky. So if you want to hold options for couple of days, index options as I'm talking about, go and check on the monthly option chain. Normally when we don't did not had that weekly options, what I used to do is, during the first 2 weeks I used to carry the current month options, and during the last 2 weeks I used to carry the next month options, because in the last 2 weeks theta decay was more. But then uh, after the weekly options were introduced, it's like they are very good for option sellings. I mean, you can sell and relax. See here, I'll simply tell you. Suppose if you have 1 lakh or at least 1.5 capital to sell the options, okay, you simply sell this 800 ka call, you will get 20 rupees. And this 20 rupees you can earn for the 4 times, because we have 4 weeks, right? So it's approx 5,000 per month. Approx 5,000 per month means within 12 months you will have around 60%. And obviously if something happens, like some news comes up, something happens, you have to adjust your positions. It's not like you sell and relax, you have to adjust your positions based on that. Then you can do your studies based on the charts, and that way you can carry options. But I suggest, if you don't have time to spend on intradays, better not to trade on indices. Instead go and trade on the stocks. You will get more profits, because indices, basically I don't believe that it will give much returns. It's my personal opinion, I'm not sure. Jay, you are talking about stocks. No, stock volatility will not depend on options data. Actually, it will like option data will confirm that the stock was volatile. It's other way around. To identify stocks which will have volatility, you have to look for support resistance breakout or breakdown. See, I'll show you. This is our old Nifty option chain, and this is your current Nifty option chain. Let me reload this as well. See, we are looking at 700 ka strike. Okay, that's your 700 strike. So here if you see on the 1600 calls, we have 27,500 and 13,400 on the new option chain, right? Whereas here on the 700 we have these numbers, right? Here we have 15,75,000 and here we have 27,570. So basically what they have done is in the new site they have taken they have considered contracts, number of contracts, whereas old site had number of quantities. Like if you divide this, let's do that. Okay, calculator, let's take this number 1575 600 divided by 75. That's our lot size in Nifty, right? We get a number 21088. It should match with this. Okay, this one here, I'm taking the wrong one there. 700 we have 21088, which we also got. So that's the difference between the new option chain and the old option chain. In the new one we are taking number of contracts into consideration, whereas in the new one we were taking number of total quantities. That's the difference. Stock option analysis I don't do actually. I normally follow charts and based on that I do positions. I normally don't even play in stock options more often. If you want, I can show you how you can select charts. If like this thing, let's go on to hourly. Okay, now here my price is moving like this. So if my price breaks this low, because that's your support and resistance, that's your important level. If price breaks this low, it may go down, right? If price rejects and trying to bounce, it may go up. So normally look for such stocks where you can have both side moves possible. And if that is the case, you can look at its option chain and decide which have the highest volume and trade that, because in stock options all you need is liquidity. Okay, normally what happens is, like suppose I'm taking that Bobby Thomas question. If you can see column situation changing, say from bearish to bullish, how would you adjust the triangle taken in 2:3 premium ratio, right? So what I normally do, like I'm carrying a view. I always carry a view. I never trade indices as a neutral. Okay, I always carry a view. If my view is bearish and market starts rallying, right? At some point, my both options, the call I sold and the put which I sold as a strangle, will have approximately same amount of premium, same amount of price. Okay, that's where I ring my bells and I stay alert, right? And then if market still moving higher and higher and higher, I may sell a naked put without any hedge, but with a stop loss, of course. Okay, and quickly, shift my strangle based on the situation by closing old strangle and creating a new strangle against my view, original view. That way. I hope this clears your point. It's all depend on the live situation and what are the option premiums and how the prices are moving, how much far is my resistance level if prices is moving higher in that situation. But as an option seller, you will earn more when the market is falling compared to when the market is rising. That's my personally I observe that. No, Nilesh, option chain volume does not count much due to intraday activity. I only look at the volumes and change in OI to select the strikes which I want to catch during the EOD only. And see, if you do this these ratios, if you find around 3, 315 or near to close, okay, and if you see that the call writing is like around more than 50%, whereas put writing is around 30-40%, in that day, on that day, take a risk and carry a put overnight, weekly put. There is a high chance that you will see a gap down because call writing is aggressive at the end of the day, but it should be greater than 50%, huh? Or at least around 45 to 50%, you can say, at least. Then think for carrying the options in during that day. All you need to do is just copy paste and do the calculation, simple. Around 3, after 315 you can start by the end, and you want to take positions between 325 330, where you will not have that much option decay, premium decay. Due to volatility shift during the end of the market, weekly options normally they lose the premium. So that's why if you want to carry a position, and if you want to take it near, you would like to take it near the end of the trading session, that is around 325 to 330. So that's where you will have around 50 paise to 1 rupee ka premium decay only, premium loss, premium erosion I can say. But that things happens like only once or twice a week. That's when I normally carry options. No, first option data will give you signals. Then only SNR. If your price is near support or resistance, and if you see a huge writing appearing, then it will give you an idea whether that support or resistance will hold or it will break. It's like both works on conjunction with each other. Like for tomorrow, if we can say my Nifty spot is trading in this range, that's your high and that's your low, which is not able to break, right? So if price comes near this and I see this level around, let's say, 4 500 odd zone, and I see that call writers are adding calls more aggressively than put writers, right? In that situation, I may go, sorry, I may look for long opportunity, because if the call writers are adding positions, they think that this price, sorry, I have, like, if call writers are adding positions, then they think that it will fall, so I may look for the short position here, that way. So any other doubts or anything? Can option tell us about the trend in stocks? I'm not sure. Like in stocks, I don't normally follow option data. Like we have around 140 or 130 plus FNO stocks. Out of them, we only have 20-25 option, active option chains. Based on that, I mean, it's like too much work to do. Instead we can find support resistance on chart and trade that, because eventually the option writers or in the stocks, they are also following the stocks like the chart itself, right? So why not follow chart and based on that take trades, price action basically. Yeah, that's for Bobby G, that's for your EOD, like near the end of the day. No, that's the only thing I look, along with sometimes, sometimes I do gamble by carrying options. Like, due to strong feeling that yeah, buying pressure is buying pressure is very high, then I may carry. Like, okay, let me tell you this. Okay, that's your. Let me put the 15-minute chart, and this was I'm talking about this 26. Okay, um, let me take a screenshot of it so that I can write on it this thing I am looking at. Okay, okay. So here my market was rising, and then first it faced resistance in this zone, eventually crossed and holded this level for some time, and after that it collapsed. Okay, so till this point I knew that buyers were in the market, whereas suddenly sellers also appeared. Okay, now I was waiting for price to cross this level, this high. I wanted, price to go up. But what happens, as the price moves higher, buyers managed to cover till this high, but then sellers came and they brought the price down to this low. Then again buyers came and they are still struggling at this high. Then sellers tried and they covered this much distance. So as you can see, buyers are not able to move higher, whereas sellers are getting exhausted, like they are having higher lows. Buyer is still having, higher, like same kind of high. And after that this breakout happens and suddenly this breakdown also happens. So that day I was quite sure that yesterday, like next day going into the market, we may have an like a gap down, right? But since this was I guess expiry day, this was the expiry day, so I couldn't carry a position. But here we did not get a gap down. It's showing we got a gap down. Okay, the adjusted close was here, and then we gapped down based on this, like this. So based on that I got that idea. So I normally use those things as well to, just like carry a option if I want. That normally I don't do that. It's like very like uh, it's clearly visible, like it's when it's clearly visible, then only I carry those options based on price action. Otherwise I do this change in OI ka ratio. Yes, percent formula is change in OI upon net OI. But please, I request, do not do this like change in OI upon net OI on the whole chain. You don't want that. You select the strikes, which strike range you want, and do this on that strike range, because option sellers want to earn more money, and more premium value it has near the ATMs. Too deep into the ITM won't have much theta value to it, and very far OTMs will also have very less premium to it due to theta decay. So they want a balanced premium where they have some intrinsic value as well as some like extrinsic value, that way. Anyway guys, let's wrap up for today. If you have any doubts or anything you want to ask, you can ask me in the group itself. I will be available to answer there. And also maybe from Monday or Tuesday, I'm starting to post the video on Wyckoff's price action, and then I'm thinking to do the Nifty analysis based on that on regular interval of time. I'm just thinking, if time permits I'll do that, otherwise we'll see. Madhuji, as I said, I like this technique is I learned from experience by doing the wrong by try and error. I'm not sure whether you can say this. But yeah, if you want to read about implied volatility and volatility skew, this stuff where like when I say that if implied volatility on the put side should be higher than on the call side, you should not trust me first thing, because who am I, right? So you should go Google and read from the trusted sources. If the source is coming from NSE India, that's the best thing you can do, right? When I say about VIX as fear index and all, go do your research, then only you will be, uh, you will get more to learn. It's your experience. Consider this session as a guideline and you proceed with it, because see, I am sharing what I have learned by experience over the period of time. And that's why normally people, when people used to ask me what options you follow, I normally used to say that I don't trade in options itself, because I cannot explain why and what and how, because yeah, that's how I do, and I don't know why honestly, but it's working for me, so I'm sharing with you guys. So I think let's wrap the session for now. If you have any doubts, ping me on the group itself. I'll be available there for half an hour. So thank you. This video will be available for next 25 hours as a private link. So if you want the link, just ping me up. I'll share the link with you. Thank you for